In the revenue report, we'll present details to understand how the company generates revenues, the fundamental earnings stream. The company builds revenues by developing relationships with existing clients and by developing new client relationships each year. Revenue is shown here as distributed by revenue range. Revenue can be seen as distributed in ranges as developed in each year. The customer count can be measured in the same ranges. Revenue generated by existing and new clients is reported as accumulated throughout the year. Revenue can be reported on a transaction level and as a percent of total revenue in those ranges. Average annual revenue by revenue range over the recent 3-year period is reported. Revenue distribution for clients and new clients by revenue range can be seen. For the recent year, clients can be categorized in tiers based on total client revenue. The lifetime value of the client, measured in revenue over the multi-year period, can also be categorized in tiers. This information will be helpful for the new owner in maintaining the important customer relationships. Revenue can also be seen for each fiscal period, typically reported in fiscal year, in the historical period, and in the current and prior year-to-date periods. The composition of gross revenue can be seen as reported by the company. Gross revenues can be reported in the common size format for year-over-year comparison. Revenue can also be recognized in each fiscal month. This information will be very useful in developing the future sales forecast and in developing the cash forecast. Understanding revenues is the foundation for the projected performance of the existing company and will be added to the understanding of the cost structure of the company, which we'll discuss in the following chapters. This knowledge will be helpful in developing the forecast performance of the new acquisition company, which in this case will include an assumption for debt and equity financing for a typical buyer. In the pro forma business plan, we can use scenario analysis to understand the range of forecast performance, including a break-even point for sales where net income would be 0. We will also use this information to develop the cash forecast in the first year following this acquisition. In this chapter, we considered how the company generates revenues, the fundamental earnings stream. Understanding how the company performed in the historical period will provide a basis to understand future performance. For more information, contact Rainier Business Intelligence.